Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and today we're going to do a Seattle real estate news review. In this video, we're going to review a recent Redfin study republished by a Los Angeles news outlet, and in this conversation, we're talking specifically about institutional investors. So this article talks about people that are purchasing homes as investors, not individual investors, but actually institutional investors, talking about the amount of homes purchased by these investors versus single-family owner-occupied homeowners. And I think that this article is relatively interesting, specifically as we start to think about the ramifications of institutional investors and how that impacts regular everyday home buyers like you and me. We'll start off by reading through this article as we do in other news reviews, at least sections of the article, and then I'll add some context as we read through it and wrap up with some thoughts at the end. This article is titled "Residential Real Estate Bought by Companies Hits an All-Time High in the U.S." It begins, residential real estate bought by companies or institutions hits an all-time high of 67,943 properties in the second quarter, according to Redfin. We mentioned them at the beginning, a Seattle-based online brokerage. That's more than a twofold increase from a year earlier when the pandemic temporarily stymied the real estate market. It also represents 15.9% of the properties sold in the April through June quarter, or just below the record high of 16.1% share of sales in the first quarter of 2020, Redfin said. The data, which goes back to 2000, includes all residential property types, including apartment buildings and condos. It excludes purchases by small individual investors. So again, we're talking about the big institutional investors. And this could include people like Redfin, who are iBuyers, and we'll read a little bit more about that. When looking at only single-family home sales, companies accounted for 16.1% of all purchases in the second quarter, Redfin said. 10 years ago, it was 8.4%. Wow, that's a big jump. This article continues to theorize about how these institutional buyers may impact the traditional homeowner, things like increased competition, greater ability to compete on price, and maybe even pay cash. It also talks about some of the other institutional buyers, iBuyers, who maybe aren't necessarily buying and holding properties, which would put properties back on the market. So flipping properties, and Zillow's doing this, Redfin's doing this, Opendoor's doing this, where they're purchasing homes from people maybe at a discount, but also at a convenience for them, and then putting them back on the market after some fixes, or even just putting them right back out on the market. Although it's nice to hope that the institutional buyers are putting houses back on the market, more often than not, according to the data here from Realtor.com, it seems like more often than not they're holding the properties for the long term and turning them into rentals. So I think the question is, how much of an impact does this really have on the housing market when you have outside investors, institutionalized investors, pooling money together, buying single-family homes and buying condos that otherwise would be purchased by normal people like you and me that want to have a place to live? And it's interesting to note in this article as well that it was pointed out this isn't talking about a single investor like you or me who's maybe going to purchase a second or third or fourth property and hold on to those. So smaller investors aren't even considered in this article. It's just the big boys and the big girls, the big players in the market. So a few thoughts here as we wrap up this article. Again, I read some sections towards the beginning. I'll link up the whole article down below in the description if you want to check it out and read a little bit more on your own. But my personal thoughts here, and just experience, we'll start with that, is as a real estate agent in the Seattle metro area, I am not encountering institutional investors on a regular basis. And I think part of that is because a lot of the bigger players that are buying houses aren't necessarily buying them here in Seattle, or they're just starting to ramp up. There are other markets across the US where the iBuyer and the institutional investor are a lot more common. And some of that has to do with price points. Some of that has to do with just where they decided to target and start and work up these beta programs. But as time continues to progress, they start expanding into different markets. So I think we're going to see more institutional buyers in the Seattle area as time goes forward. But at present, I'm not encountering that regularly. I've encountered it a little bit from some smaller players. In the instances that I'm thinking of, the institutional investor was not as competitive on the price or on the terms, specifically in a multiple offer situation. So not much of a factor. The more common issue in our market, in the Seattle metro market, is that investor who is maybe rolling out of a 1031 exchange, who's super motivated and also maybe has more financial means. It's also the person relocating from out of state who has more money maybe, and they came from a more expensive market and they're moving here to the Seattle area. It also is the just generic investor that is buying properties one at a time to build their rental portfolio in a market where housing is appreciating real quickly and also is a desirable place to be, which makes people want to buy houses here. So I think some of the other factors outside of institutional investors that are impacting our market, number one, you have the influx of people from other places to come work in Seattle. So you have a net migration of people into the metro area versus out. And I think that causes a supply and demand issue on the front end. And then you also have people looking at the market and starting to want to put money into it, speculating that it's going to continue to grow. You have people from outside and also from inside wanting to maybe purchase extra properties so that they can participate in this price appreciation and growth. And all of that, I think, is even more so a factor than you have these institutional investors. But at the same time, as they become a bigger player, I think all of these factors start to push out people into other places because of price. And I think it just continues to make it tougher and tougher to buy a house in the Seattle area. Honestly, long term, I don't know what the solution is to allow people to be industrious and still purchase rental properties and also make housing affordable. I think inevitably, as time goes on, the population is going to continue increasing, and it seems that people are tending to move, at least at this time, towards the more urban, suburban feel versus the rural area. So we have people moving here to the area. And this is happening all over the US and in other parts of the world where you have people moving towards the cities, at least in the general vicinity. And so I think long term, you're still going to continue to have a housing crunch. And we need to figure out, I think, first of all, how to develop more housing for people and how to increase density in areas where we can and try to preserve the neighborhoods as much as possible. Specifically in Seattle, the city's been doing a lot of that and was recently rated relatively high in terms of the mix of affordable and the more unaffordable, if you want to call it, housing in each neighborhood. So there's a lot more diversity in some of the Seattle neighborhoods than there are in other places in the area and around the country. But at the same time, there's got to be a way to balance this ever-growing, or at least increasing for the moment, institutional investor and how to, I don't know if it's limiting it or if it's giving some kind of an advantage to an owner-occupied buyer. But I know for a fact that there are a lot of people trying to buy a house, and it's competitive already, and it's only going to continue to get more competitive with added competition. So again, I'd love some thoughts from you down in the comments. It's fun to hear other people's thoughts here. I'd love solutions if you have them. But if you want to dialogue down there in the comments, feel free. And if you got some value out of this content and this video, please consider subscribing to the channel. There are lots of videos that I post, some about the news in the Seattle real estate market, but also the market updates and other videos that are relevant to you as a home buyer or seller in the Seattle real estate market.